Welcome back. Our research team is standing by with a list of top 10 stocks for the day. First up, we have Zomato, which has been hitting new highs daily. Nimesh is here to give us the latest on that. Nimesh, good morning.
Morning, Sonia. So, expect a large block in Zomato in today's trade. So, Ant Financial is looking to sell 2% of the company's equity via block deal. The book was launched last evening. The book size is 2,800 crores. And I understand the demand is quite mixed and largely from the hedge funds. So, need to see whether the deal gets executed in the block window. There is a 90-day lockup now for further stake sales. So, they'll be left with 4%, but that can come only after 90 days. So, I'll go with green because if the deal happens in the block window, you'll see a bit of rally as well in Zomato in today's trade.
Okay, all right. Thanks a lot for that, Nimesh. Also, you are tracking another large trade, which you also gave us a heads up a couple of sessions ago, and you told me, Nigel, keep your eye out. Next few days, we'll hear a lot more. Tell us about another big one. So
the other big one is Samvardhana Motherson. It was part of my charter list yesterday as well. So large block there as well. 4.4% equity is going to get changed hands. The foreign partner, the strategic investor, which is Sumitomo, they are looking to sell 4.4% via block deal. The floor price is 118, but my sense is even this deal can happen in the block window. The demand seems to be quite strong as far as Motherson is concerned. The most interesting part is now there is a lockup of 270 days. So for next 9 months, the further 10% cannot come as far as Sumitomo's stake is concerned in some of the Motherson. So I'm going with green because the demand is good, but need to see whether the deal gets executed in the block window today.
All right. Nimesh, thanks very much for that. So lots of blocks. Fear the blocks, as Nimesh said, with so much supply coming in, but maybe not. Well, let's talk about Havells now, which is the next one in focus. Upasana is here with that. Upasana.
Well, Havells remains in focus today as the company says that it is planning to expand its existing product portfolio with the introduction of kitchen appliances in segments like cooktops, chimneys and other built-in appliances. It is the expected date of launch of the new category of products is May 2024 is what the company has indicated. And company also says that the new venture is expected to bring benefits of synergies of business with its existing range of small domestic appliances. Well, the company targets to become top 3 players in 3 years from the start of operations. That's the reason the stock remains in focus today, and I expect the stock to open in green.
All right, thanks, Upasana, for that. Well, let's hop across to Mangalam. He's tracking Aditya Birla Fashion. Mangalam, why is that?
Well, we've been talking about, some funds coming into the company as an important trigger for them. And this one was an important one as well. GIC, which through its investment arm, Caladium Investments, has exercised their right to convert the warrants that they were issued about 18 months ago into equity shares. And that's a big positive because this brings around 1,425 crores into the company itself. Remember, these warrants were allotted to GIC in May 2022, were convertible at a price of nearly 289 rupees per share. And this compares with the current market price of 229 rupees per share as well. So in May 2022, if I had to jog your memory down, the GIC had invested around 770 crores via pref issue and were allotted warrants worth nearly 1,425 crores. What does this do to their debt? Well, the debt as of September 2023 was close to 4821 crores. So this infusion of nearly 1,400 crores at a price much higher than the current market price should assuage some of their balance sheet concerns, and hence it's a positive.
got it, Mangalam. Thanks a lot for that. Well, let's go across to Sonal. She's here to tell us about MGL. Morning, Sonal.
Good morning, Nigel. Well, the company will be in focus because they have gone ahead and reduced CNG prices by 2.5 rupees per kg in Mumbai and the nearby areas. And the revised price of CNG will be 73.5 rupees per kg effective today. The reason they give is because natural gas prices, they have fallen and they want to pass it on to their consumers as well. What this would do is volumes will see an improvement, and MGL has been one of the outperformers in the entire city gas distribution companies in Q3, and this could continue in Q4 as well. In terms of price cuts, Gujarat Gas, remember, last week had cut the prices of the industrial segment. This is again because of lower gas prices, and that is something that would continue to be the trigger for all these city gas distribution companies. Watching out for IGL if they go ahead and cut prices as well.
All right, Sonal, thanks very much for that. Well, let's move on and talk about pharma, right? Torrent Pharma and Suvain are the ones in focus. Ekta is here to tell us why. Ekta, morning.
Thanks for that. Well, I'll start with Suven because they held their analyst call yesterday post the merger with Cohance, which was announced. So some investors, in fact, voiced unhappiness over the dividend policy payout. Remember that borrowings for the company have risen to 490 odd crores versus 232 crores year on year. And that was on account of a compulsory convertible debenture payout in terms of interest as well as dividend of 160 crores in 9 months. So there were a lot of questions with regards to that on the call. And 3 to 4 quarters, according to the company, will remain soft due to global inventory destocking. Margins are expected to settle in mid-30s for the combined entity, but there could be some impact in the near term on the margins. So on the back of that, we could probably see a further downside on Suven today. And Torrent Pharma, I expect the stock to be in the green because they've received an establishment inspection report for their Gujarat oral oncology manufacturing facility. It closes the inspection, which was, which got 5 observations in the month of December. So that stock should be in the green.
All right, thanks a lot for that. Well, let's hop across to Vivek now. He's tracking JSW Energy and GR Infra. Vivek, over to you.
Well, good morning. That's right. So we are tracking JSW Energy. Remember, the company's arm, JSW Neo, has a subsidiary named JSW Renew Energy, which has gone ahead and signed a battery energy storage purchase agreement with Solar Energy Corporation of India. Now, this particular project pertains to supply of close to 250 megawatt, which is part of the 500 megawatt hour supply agreement that the company had come up with. So now what the company will receive is it will receive fixed capacity charge of rupees 10.84 lakhs per megawatt. This is for a period of 12 years for 60% of the total capacity. The remainder 40% of the total capacity, the company is free to use as it is required. The second stock on the radar is JSW Infra Projects. Now remember, the promoters actually at the end of the December quarter held a stake of over 79.5%. So the promoters have gone ahead and informed the exchanges that they would be paring down stake up to 5% in order to go ahead and meet SEBI's minimum public shareholding norms. On the back of that, expect a supply overhang and expect the stock to remain in red today.
Okay, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow. There's Zomato, Samvardhana, Motherson, Havells, Aditya, Birla Fashion, MGL, Torrent Pharma and JSW Energy. While stocks with negative news flow, there's JM Financial, Suven Pharma and GR Infra Projects. Well, let's also talk about what's happening in the world of commodities because Brent crude is now below $83 a barrel. Manisha Gupta is joining in for a roundup of all the action this morning. Manisha, good morning.
Morning, and thank you for that, Sonia. Well, yes, the crude oil prices seem to be slipping away from the 4-month highs. We did see 3.5% of gains in the previous week, but for this week, we've turned into negative right now. The concerns come in from China achieving economic growth that they have set out for this year. It's also about OPEC and allies production cut extension. It's no surprise, and they have put it on the similar lines. The street is anticipating a surplus in the second quarter of this year, and that seems to be weighing onto the markets. Also, a rise in U.S. crude inventories for a 6th straight week is weighing onto the markets as well. The only thing that seems to be glittering clearly is the gold price is holding very close to all-time highs, above $2,100 per ounce. There is support from geopolitics, financial market uncertainty, and various banks and brokerages now suggesting that $2,300 per ounce is a possibility by the end of this year. A quick word on metals, where we have seen a decline continuing. The China are coming out with the 2024 GDP at 5% is something that the street did not expect. And there is no stimulus measures or concrete statements coming in from China in sense of strength projection, and that's weighing on. So almost all metals starting the day in red.
All right, Manisha, thanks very much for that. Good to get that perspective on commodities. We'll take a break here. We are back. Devin Choksi of DR Choksi for some stock coming up in just a bit from now. Stay with us.